Hey everyone, welcome to the KE Report and another Sunday daily editorial chatting with Marc Chandler. Marc is the managing partner at Bannockburn Global ForEx, also editor of the Mark II Market website. We usually talk to Marc about the currency markets as well as recapping US data. But one thing that we're really going to focus on here is this whole concept of the US revaluing the gold that they hold, marking it to market values. So the US is holding a massive amount of gold at right around $42 an ounce. A lot of their initial costs in gold. Now, revaluing this to almost $3,000 an ounce, boy, oh boy, that's a huge turn in terms of the assets on the US's balance sheet, on the Treasury's balance sheet. However, Marc, I'm just wondering your thoughts on this. My standpoint, from more of the accounting standpoint, is that this doesn't actually change any of the fund flows that the US is seeing, but it would immediately make the whole, I guess, debt situation, or at least the balance between assets and liabilities, a whole lot different when you can mark up a massive amount of gold to its current market price. So, Marc, from maybe the currency side of things, what's your take on the potential here and what difference it would make to the US if it revalued its gold?
I think there's two considerations here with gold. One is, as you mentioned, some indication the U.S. is thinking about revaluing its gold. Right now, like you mentioned, gold is being carried, the book value of it. What's it on the books at? About that $42 an ounce, which puts the U.S. 8,200 metric tons worth about $11 billion. If we were to revalue that to, say, 29.20, which we were trading at the other day, that would put the gold holdings, the market value, something like $765 billion. So that's one element. The idea, I think, ostensibly would be that it would improve the government's balance sheet. And the key part of the balance sheet they were talking about here is the assets to its liabilities. By they would be gaining about $750 billion on the asset side of its balance sheet. And this comes, of course, after the U.S. has been running these 6% budget deficits, that is, gaining liabilities been rising sharply. This would be a big jump in the asset side of the balance sheet. But how much debt does the U.S. have? It's roughly 25 trillion dollars. So putting another $765 billion or so of assets is really a marginal change. It's hard to talk about $765 billion as marginal, but in the context of overall U.S. debt, I think it's quite modest. But there might be some case that doing it might help lower long-term interest rates. But there's another story with gold, why the revaluation of gold could fit into something besides just this balance sheet. Imagine that some of the people that President Trump has surrounded himself by, including someone who he might name to the Federal Reserve, like Ron Paul or Judy Shelton, they want the U.S. to go back to the gold standard. It's hard to go back in the gold standard if we're valuing the gold at at $42 an ounce. So raising the price of gold, carrying it at a higher level, would help facilitate, some people think, moving back to a situation where the dollar is backed by gold. Hard to do it at $11 billion. I personally think, given the size of the economy, it's hard to do it with $765 billion. But it gets us a step more in that direction.
Yeah, Mark, I think that's a solid point. And even Treasury Secretary Scott Bessent has even mentioned the idea of going back to more of a gold standard or having some kind of a strategic reserve. And so this kind of plays into that thinking. But let's tie into the interest rate point you made. I think some of this is just a bookkeeping thing where if you have an additional 750 billion, gives you a little more wiggle room, makes the balance sheet look a little tidier. What does that do for interest rate? What effect could that have in the bond and treasury markets?
I don't think it's really a key driver. I don't think it would be a key driver. I think people who follow these things know that, for example, uh, before the '07-'08 financial crisis, before the European debt crisis, they too were carrying gold on their books at low prices and marked it up and have come up with rules to determine how they do it, like on a quarterly basis, how close they bring it to the market. Because what happens if imagine the danger here? The U.S. revalues the gold to say $2,800 an ounce, and for some reason, gold collapses to $1,500, which is still a good price, historically speaking. And so it's really a question of how close do you get to the prices, and then what do you do with the loss if it comes to that, a paper loss. And so my sense is that when you're thinking about what's going to drive U.S. interest rates, I don't think that ultimately the price of gold that the U.S. is recording, and when you talk about a strategic reserve, we have 8,200 metric tons. We've got more gold. That is, the U.S. has more gold than anybody else in the world. We already have a strategic reserve in gold. What are we doing with it? Nothing. If we revalue it, the argument would be the balance sheet is better, I think marginally. And so some people think this could help the goal of the Treasury, which Besant argues is not to complain about the Federal Reserve and the short end of the curve, but to drive down longer term interest rates, which are the key for businesses and mortgages. And I think that, it's just a hypothesis, right? It's like, of course, Besant is talking the Treasury's book, wishful, aspirational ideas. And I'm more thinking of it as a market participant. If you tell me the U.S., which is say, a 25 or $30 trillion economy, and you tell me that they're going to get another $760 billion in assets, would I still want to get better than 4.5% for my 10-year for lending the government money for 10 years? I think so. But so we'll have to see. But I think this is the challenge for the government, is for the Trump administration, is they've got a lot of conflicting policy objectives. They want to lower long-term interest rates, but they're doing things that might boost inflation, like rising tariffs. They might be also through the immigration policy. Such a large number of jobs in the U.S. in the last couple of years have been filled by immigrants. Our domestic population, domestic labor force growth is slow. And so, if anything, it's pretty flat. Guys like me, many of my cohorts have retired, maybe retired early because their 401ks have increased, house prices have increased. So we're seeing on the margins, for immigrants, foreign-born people, accounting for a large share of U.S. jobs. And if the U.S. cracks down on that immigration like Trump has threatened, and the flow of new workers slows considerably, then we're going to see some inflation from the wage side or from labor shortages, creating supply shocks. So I think there's a lot of moving pieces here. But for me, I want to stay focused on what's the real driver. And the real driver is that even though we had hotter than expected CPI and PPI, the conclusion from economists is that the components that feed into the PCE, which the Fed targets, may come in lower, and we'll find that out not next week, but the following week. And so what we're seeing really is that U.S. interest rates are lower now, that is lower after the CPI, after the PPI, than it was before. And it's a surprising thing about gold, I think, is that gold is off sharply here ahead of the weekend, despite the the softer dollar and lower interest rates, which seems to be a bit of an anomaly. People are telling me that part of this is people like long liquidation. People are just like the latecomers. After we went through yesterday's low right around 2,900, triggered a bunch of stops. And also people are talking about the end of a gold, like a war premium for gold, because the U.S. and Russia are beginning to talk about some kind of resolution to the war in Ukraine, that gold may lose some of this war premium that it had.
Yeah, fact of the matter here, Mark, is gold was just at all-time highs, and it is practically at $3,000, even with a little bit of weakness today. Look, if everybody is thinking that, I guess, inflation data is still on the PCE number, not going to be too high, fact of the matter is inflation is remaining generally higher than the Fed wants it. But back to this whole revaluing gold, increasing one-time thing, the assets on the balance sheet. I guess you would think that somebody would do that if they wanted liquidity out of these. But I don't think the U.S. is talking about selling gold. But hey, the U.S. has talked about, or at least Trump has talked about, investing some money in Bitcoin. So for me, this whole revaluing gold, it's not exactly a short-term asset in terms of liquidity, although they could sell gold quickly. So that whole bump to the balance sheet, what is the play here? Do you think the U.S. could actually start selling gold, or is it just all about maybe having people think that the US is backed more by gold, which to me seems a bit of a disconnect because I feel like everybody can do the math and they know how much gold the US has. So just because they're carrying at a different level doesn't mean that analysts wouldn't revalue that when they're analyzing the balance sheet.
Yeah, I mean, I think you're right. I think so. Yeah, I think a lot of people are caught up now, so they revalue the gold and they're like, and then what? So now the Treasury has, say, another 170, $50 billion of assets. What do they do with it? And I think that some people are thinking that some of it could be used to fund the sovereign wealth type fund. So I sort of think that sovereign wealth fund would come out of the exchange stabilization fund, which the Treasury has full discretion over. It's got about $120 billion in it, which means that it's got more money than Besant managed when he was at a hedge fund. But the trick, I think, is that so if you know that someone who's got sitting with the largest holder of gold in the world, they just reset it. What is the chances that they sell it? And if they begin selling a little bit of it, you have to be fearful of overhead supply. That is, how many metric tons do they sell? And to make it meaningful, it's not just like selling a little bit. And so I think the fear that the U.S. would sell gold, partly because I say that the interesting thing perhaps about Trump's leadership is sort of his embrace of sort of the madman theory, going back to like Nixon, who threatened to use nuclear weapons on Vietnam to bring them to the negotiating table. People said, this guy's crazy, he'll do anything. And Trump has shown, I think, that he's willing to shoot himself in the foot. And by that I mean the U.S. there's more consumers of steel and aluminum in the U.S. than producers. So, but tariffs on steel and aluminum favor the producers over the consumers. The U.S. is willing to shoot itself in the foot to make a bigger point. Could it do the same thing with gold? It's possible, but I don't think that's how it's going to happen. Now, there might be some way to lever the gold, to borrow on the back of it, but I don't think the U.S. needs to. The U.S. is not like, say, El Salvador, which might need to do something like that, or Libya. So I'm not exactly sure how it really benefits, but there is a chance that through the accounting treatment, that the money could be transferred someplace else and then used as the basis to do something else, whether it's a sovereign wealth fund, leverage a sovereign wealth fund. You've got your gold, you buy your assets on like a line of credit that's backed by that gold. It's just unclear what's going to happen. I think that's really an important takeaway. Such great uncertainty surrounding these issues.
Yeah, I think you nailed it there, Mark. I don't think the U.S. has the intention of selling all that gold. That would tank the market, but they are looking at using it as a line item on the sovereign wealth. That's kind of the indication Scott Bessent has been talking about. Talk to us more about what a sovereign wealth fund in the U.S. would even look like. What would they, would they buy crypto to Corey's point, or would they buy other assets, or, how would that work? And what is the point of having the sovereign wealth fund in the first place?
Well, it matters how broad of a definition you want to have for a sovereign wealth fund. Alaska has a sovereign wealth fund. What do you call say, a state employees pension fund, like CalPERS? Isn't that a bit like a sovereign wealth fund? Typically, though, the sovereign wealth fund is central government and tends to be from countries that have surpluses, trade surpluses, current account surpluses. I think that the gold on the Treasury's books could be used to seed the sovereign wealth fund, but I suspect it's really going to come out of the exchange stabilization fund. And that's really another point about Bessent, I think, and what we've seen with other officials. We had this past week some U.S. officials were in Ukraine, were in Europe, and then Trump undermined them all by announcing that he's been talking to Putin about a peace plan. So his other advisors who were in Europe and Ukraine weren't aware of it even, and it undermines their position. And so I think what we're seeing is Bessent does not speak for the Trump administration. Doesn't look like any cabinet official speaks for the Trump administration. Maybe Musk might be the closest. And because of that, I think that the cabinet officials like Bessent, they have their own ideas and their own views. But I don't know if that really necessarily carries the day unless they convince Trump. And Trump with gold, it seems that Trump does like gold. He's talked about having the dollar backed by gold. But if you were in a foreign country and the U.S. says we're going to be backing the dollar by gold, it's like, so what? The U.S. broke that unilaterally without even notifying Europe or other allies. August 15th, 1971, Nixon severs the ties with gold. That is what ends the gold standard. And so just for the U.S. dollar to be backed by gold, like, so what? one, can you trust it? Two, the dollar is already at historically rich levels. I know you said gold had made a record high, but recently, and the dollar on a valuation basis has rarely been stronger than it is now. And if gold-backed dollar is somehow going to make it stronger, doesn't that conflict with Trump's and Vice President Vance's idea that dollar is overvalued? So again, this is like conflicting policy goals here, and I'm just not sure of how it actually plays out. I don't think that we can go to a dollar gold standard by ourselves. I don't think it'll be very meaningful. And again, I'm not sure that the power lies in the cabinet as much as it still is in the White House.
So does it change any of this narrative of the debt problems that the U.S. is facing and why people are, I guess, longer term worried about the continued increase in debt in the U.S.?
I don't know. It's sort of like the weather. Everybody complains about it, but nobody does anything about it. And I think that if the U.S. was really in a debt crisis, our 10-year yield would not be where it is now, 4.47% maybe. And you give me that inflation number that came out. And so I'd say our real interest rates are very low, which is to me says the market is not demanding a premium for the U.S. because of our fiscal excesses. So, but I do think that people they say they're concerned about it. Congress doesn't seem to be doing much about it. The president doesn't seem to be doing much about it. And I'm not sure that the markets have reached a point where it's like crossed some kind of Rubicon, where, what the U.S. Supreme Court Justice Potter, he was once asked about pornography, and he said he didn't know what it was, but he knew it when he saw it. And I think the same thing with the debt crisis in the U.S. People are concerned about high levels of debt in the U.S. All of our debt is denominated in dollars. The chances of default seem pretty slight. In fact, it seemed more that the U.S. would have the ability to pay back the debt. It's really a question of willingness. I'm not sure that, there's talk about revaluing gold or putting the dollar on a gold backing of some kind. It's been great for headlines, great for stories. I'm not sure it's really been that big of a market driver outside perhaps the gold market itself.
All right. Well, look, the gold market has been doing very well, and the stocks have also been following along. So, quite frankly, that market has been outperforming a lot of other markets, and I think there's a lot of reasons why, a lot of different narratives going in gold's favor. Yes, a little weakness to end the week, but gold was just at all-time highs, and still 2,900 is a very strong price for gold. Just interesting to see the precious metals back in the headlines. This administration is causing waves in a wide range of markets, and precious metals seems to be another one that they're looking at. Again, Marc Chandler, managing partner at Bannockburn Global ForEx, also editor of the Mark II Market website. Always a pleasure chatting with you, Marc. Thanks for your time today.
Guys, good luck. Have a good week.